Hello, good morning, everyone. So welcome to our daily briefing. So today is 9th September, which is Thursday. Okay, so let us start our briefing by take a recap on previous important economic data. So the first one is US JOLT job openings July. So the previous is 10.185 million. The forecast is 10 million and the actual is 10.394 million. So the actual is slightly higher than the forecast. So this is really a good news for the US dollar. And then we take a look on our market graph here. We can see that the US dollar rise again last night. So the US dollar rise since Tuesday until last night. Okay. So we go back to our PowerPoint here. And then the next one is Bank of Canada interest rate decision. The actual previous and forecast is actually the same at 0.25%. So they remain their interest rate decision at 0.25%. So this really doesn't affect much to the Canadian dollar. And then we go to the next one is the Canada IV PMI August. So the previous is 56.4. The forecast is not available. So the actual is 66. So it's actually the actual is higher than the previous. So this is really a good news for the Canadian dollar. But we take a look on our market graph here about the US dollar versus Canadian dollar. And then when the two important economic data released at last night 10 o'clock, the USD CFD it rise up for almost around 100 pips last night, but it went down again because of the Canada IV PMI, because this is a good news for the Canadian dollar. Okay, so we go to the next part of our daily briefing of today is the previous day market volatility recap for gold. Okay, so the gold market it declined 200 pips last night. So what happened on the gold market last night? So let us rate the factor here. Okay. So spot gold continued to fall on Wednesday, reaching its low point since August 26 to $1782.59 per ounce. So the strengthening of the US dollar and rising US Treasury yields overwhelmed the increase in global economic growth concerns that boosted gold prices. So what happened? So what is the reason the gold went down again last night? So because of the strengthening US dollar and rising US Treasury yields. So that's the reason. Okay, so we go to the next part of our daily briefing today. Is which important economic data we have to focus on today. So when it comes to EU session, we have to focus on this important economic data, which is European Central Bank interest rate decision. So the previous is 0%, forecast same at 0%. And the data release time is at 7:45 tonight. So if higher than expected rate is positive for the euro dollar. So while a lower than expected rate is negative for the euro dollar. Okay. So when it comes to US session tonight, we have to focus on these important economic data and also the ECB press conference. So if any one of your client they are trading any trading instrument regarding the euro dollar, they have to focus on this ECB press conference. So this is very important because this one will affect the euro dollar. Okay, so and then we take a look on the first US session important economic data today. So it is US initial jobless claims for September, and previous is 340,000. The forecast is 335,000, which is slightly lower. Their forecast is slightly lower than the previous one. So actually, this is a good news for the USD, but we still have to wait for the actual to come out, okay, at 8:30 tonight. So if higher than expected reading should be taken as negative for the US dollar. So while a lower than expected reading should be taken as positive for the US dollar. Okay, then we go to the last important economic data today is the US EIA crude oil stocks change and 3rd September. So the previous is negative 7.169 million and the forecast is negative 3.832 million. And the data will be released at 11 o'clock tonight. Okay, so if the increase in crude inventories is more than expected, it implies weaker demand and is bearish for the crude prices. Okay, so if the increase in crude is less than expected, it implies greater demand and is bullish for the crude prices. So we have to take notes on this. Okay, so we go to the last part of our briefing today is the market update for gold again and again. Okay, so for the resistance level of gold of today is 1800 and the support level for today is 1781. Sorry. Okay, so my personal opinion, I will take it as a bearish today. So bearish since Tuesday until now, I will continue to take it as a bearish. Okay, so why I will take it as a bearish? So let us read the factors here. So the Fed stated in its latest page book on Wednesday, which is last night, so that the US economy slightly slowed down in August. And people are increasingly worried about the impact of a surge in the number of COVID-19 new cases on the economic recovery. So, but the price of gold continues to stay away from the 1800 mark, which is going down again. I mean, far further away from the 1800 mark. So, which is quite detrimental to the subsequent trend of gold prices. So, it may continue to be weak in the future. And the trend in the day depends mainly on the dynamics of the European Central Bank. I mean, this important economic data. European Central Bank interest rate decision. Okay, so more and more people in the markets speculate that the European Central Bank will begin to reduce the stimulus measures, which introduced during the epidemic. So in the day, we will focus on the European Central Bank's interest rate decision and the US initial jobless claims data. Okay, so if the news after come up when in the press conference they're talking about the news is good for the US, it's good for the euro dollar, then we will look for further downside there is not a really good news for the gold market here, the gold prices here. So that's why we will look for further downside. And our target for today, we will put it at 1781. If the gold didn't go down and then it rise up to the 1800 mark, then we will look for further upside. And our target will move from 1781 to 1807 here. So which is R2. So that's all for our briefing today. And I wish you have a good day and see you again. Bye bye.